afternoon, everyone, and welcome to Stock Market Today. Ali Corum and Ed Carson here with a look at the market in a mixed session. Tech taking the lead, but Ed, are we getting a little too top heavy in this market with those mega cap stocks performing so well?
Yeah, that definitely seems to be a risk. And one of those mega caps that was doing well was Amazon, breaking out of a cup with handle base. Kohls also did well, strong earnings, and ServiceNow is looking a little bit close to actionable.
Okay, well, first, let's take a look at the major indexes. Here is the NASDAQ, which gained about 0.5% today. Also on the upside, the S&P 500 up 0.3%. And on the downside, we had the Dow down about 0.2%, and the Russell 2000 down about 0.75%. So continued divergence with small caps. We'll get to that in a second. But we have the NASDAQ here just under that 16,000 mark still. So maybe a ceiling for how long, we don't know yet.
Yeah, it can't keep going up if it's going to be a ceiling. When you get to 10 points of that. Yeah, it's going sideways a little bit, but definitely been rebounding for more than a week. Nice action for techs, that's for sure. It was a mixed day, but definitely the big techs did well and retail did well. It's on the NASDAQ 100. I think that, is starting to get to be the concern. That hit a new high. That's a 1% gain. Pretty big divergence all week, really I think it's definitely more than twice as strong as the NASDAQ today and for the week.
So with the strong gain today, closing up roughly 6.7% above that 50-day line. So seems like we now have those increased odds for a pullback back in play.
Yeah, and so when you have Apple and Amazon and Google and Microsoft, which never stopped really, it kept on going. Even if Tesla and Nvidia sort of pause, it wouldn't take much for these super mega cap techs to push us to a point where a pullback is almost inevitable. So it's sort of a mixed blessing. I mean, it's definitely pushing things along. These stocks look good. But if we go much higher, you could easily imagine a pullback, and even just to the 21-day line would be not insignificant, at least on the Qs. That would be a few percentage points, just something to be aware of. I mean, I think it's the kind of market where there's nothing wrong with holding with what you have, but not necessarily making a lot of new buys, in this kind of situation.
Yeah, because if you are making new buys, if we do pull back, it could be perhaps normal action for your stock, or even a failed breakout, and you don't want to get shaken out of quality stocks. So timing is everything in this market. And let's check in on the S&P 500. Also trading a bit sideways at this point too. At highs though, the Dow down a little bit, back below that 36,000 level for a second day in a row, and right around the 21-day line. And Ed, your comments on small caps today losing a little bit of ground, and this isn't quite updated by the close. So this chart is showing a decline of about 0.4%. IWM, which tracks the Russell 2000, down about 0.7% or so by the end of the day, I believe. But at any rate, right around that 21-day line. But whereas you mentioned for the NASDAQ and S&P 500, we've been rebounding for a little bit over a week, we have not seen that rebound with the Russell.
Yeah, and pretty much with the Dow as well. And so it's suggesting that there's definitely been some more weakness in various sectors. Financials have struggled. I mean, energy, which did okay today because oil rebounded, but energy has been coming down because energy prices have been coming down. And some of the growth names, if you're not these mega caps, I mean, some of them are doing well, others are pulling back. It's not this clear, steady. I mean, the NASDAQ and the S&P, like, a little shallow pullback and we're moving right back to highs. It's not quite like that. It's a little bit dicier inside. I don't mean make too much of it, but it's a little bit more uneven underneath the surface.
Well, sounds like it's still very much so a stock pickers market. Well, what about stock pickers looking to get a piece of Amazon today, with the stock clearing that 3,600 level, also a recent resistance area for the stock. Amazon able to get a gain of over 4% today. Some heavy volume behind the move here. And is this the awakening of a sleeping giant?
I mean, it might be, and I really think that was a legitimate buy point just around 3,600 because that looks like a handle. I'm not quite sure why it isn't registering. It's 5 days long. It's not too deep. It's above the midpoint. So looks like it should be there at least on a daily. It's not really there on a weekly. That's the thing.
Mhm.
But that's certainly a legitimate buy area. I mean, the relative strength line is at least is at a short-term high. It's getting above sort of the middle of that base at least. I mean, it's above the handle high for sure. But you can also look on that weekly and you can see how that RS line has been sliding for quite a while. I mean, we've had a series of breakouts, honestly, that haven't worked, or the moment they get up to the buy point or breakout, they sort of fizzle pretty quickly at that point. So it's been going sideways. Maybe, as you say, maybe this is the time it wakes up, and that can certainly happen. I wasn't in love with this base, but boy, it had a nice move today and a nice volume. So it's there's nothing like strong price and volume action to make something look a little better on that chart.
Right. And ideally, we like seeing that relative strength line at or near a new high, or at least pointing sharply higher, because that is a signal of strength. If you're taking a look at a stock's performance versus the S&P 500, seeing that relative strength line pointing higher is another good sign. And that's not to say that stocks can't make big moves without the relative strength line at a new high. On IBD Live, we went into some past examples of that, but also leaders can take time off. I mean, maybe Amazon isn't the next NVIDIA, but NVIDIA took a pretty long break. But I think there's a difference between, new buys and holding through that time where you would be better off just buying the S&P 500 outright and waiting for at least some sort of setup and getting out when you're wrong or it's not going anywhere, versus sitting through this entire period, going back to summer of 2020 at this point without making headway.
Yeah, I completely agree. And it is, and now obviously there's different investing styles. I personally would have never held through this. I got out of NVIDIA in 2020. Might have been better off if I'd waited around that whole time for that big run this year. But those different investing styles, and that would have been hard to hold there because you would have done much better off just in the S&P 500.
Okay. Well, retail and especially department stores are showing some incredible strength as of late. So here's a look at Kohl's, ticker KSS. It's up about 9% for the weekend. It's definitely not alone in its group. Macy's also strong, but Kohl's moving up today by just shy of 11% with some heavy volume on the heels of a quarterly earnings report.
Yeah, first on the earnings, I want to say, I think when we first saw these department stores rebound and after the coronavirus crash, it's like, okay, but they were dying anyway, right? So it's not like, how much do you really want to buy into something that isn't coming back? But if you look at those numbers over there, okay, yeah, in fiscal 2021, which ended in January, it was a loss. But, okay, not a surprise. The place were closed. But now they're coming back. And this year, the earnings are supposed to be the best earnings they've been in several years. So it's not just a rebound; it's the best. It's the best, in quite a while. And next year, maybe it'll go down, maybe it won't. But all of a sudden, it's sort of surprising. So you can take it more seriously. Maybe that first run, you got to say, well, I don't know. That's how I was. It's like, but there's real earnings here. And so now on in the daily, nice breakout. It certainly looks like that on the close. Relative strength line, while it's been sliding down, at least hitting some short-term highs, getting above the handle high, some other areas. Intraday, it was a little bit dicey to start. And this is tricky, I think, would be. Yeah. So we've had so many of these 1 minute breakouts or these gap ups, and then you immediately falter. But I think if you drew a line sort of in the middle of that day, it's sort of like consolidated, somewhere in there. And then, because sometimes we say, well, maybe when it gets to the highs again, you can do that. But I think around there, you could have at least nibbled in because it was sort of settling down and making a real move around those areas. And then it kept on moving higher. So this is doing well. And obviously we saw Macy's just go crazy. I can't believe how well Macy's has done. It's done great. Dillard's. So there's a lot of strength in this group. This is actually the number one group. I can't believe it's the number one group. I didn't think this would ever be the number one group ever again, but it is. And that's something why you just have to, this is what the market's telling us. And there's real reasons for it because the numbers are improving so much.
Yeah, and it really feels like much of the sector too. It's not just department stores. You have the apparel and shoemakers and so many of these other related groups that it seems like there's really a lot of momentum here.
Yeah, that's a really good point. And given that there's so many of these growth things, and some of these have real growth, so you could call them growth stocks. But the growth tech stocks, they've gone on these crazy runs. A lot of them are extended. I think investors definitely should be considering retail just to diversify their portfolio in terms of retail leaders. A lot of them are getting extended. So this is why you have to
Right.
be paying attention before they make their big moves.
Yeah. And like with anything, make sure you're picking your spots and keeping an eye on that rotation. Well, so ServiceNow and the enterprise software group, another area that we've been keeping an eye on, and ServiceNow here potentially setting up, Ed, as it hangs out right around its 21-day line.
Yeah, because part of it is like, okay, in mid October, it cleared an early entry, and that wasn't a bad spot as it sort of broke a trend line. And then it broke out a few days later, but it sort of felt extended. It felt like, well, is it going to go sideways or go down? And it sort of did that, go sideways, go down. But now, and so now the 10-week line, now the 50-day line aren't far away. I mean, it's actually, I think, formed a 3 weeks tight. It's near the 50-day. And since this is a long-term leader, we often talk about buying them off of that. So this is like almost an ideal situation. It's a traditional buy point, really, and the 50-day line. So kind of thing. Either way, it sort of works. We'll see how it goes. You'd like to see maybe that bounce or rebound, clearing some of the resistance, but a stock that looked a little stretched a few weeks ago doesn't really look that stretched anymore.
So with it about 1% above that 10-week line, yeah, if we could get a little bit of a bounce, because as you said, that early entry came in mid-October, right around that follow through day. So there was a lot to be looking at, and now it's maybe settled down a little bit, and we'll have to see if it does perk up here a little bit with it being in very close striking distance to that 10-week line. Thank you, Ed, for all of your analysis today, and for everyone for tuning in. The team will be back tomorrow morning on IABD Live, not with me, but with someone even better. So it's all good. Anne-Marie Bain of thetradingbook.com will return to the show as our special guest. Looking forward to getting some good option ideas from her and taking a look at the market through her perspective. So Ed, that'll be a very fun show.
That should be a lot of fun. And she'll be really going through the intraday charts, I assume. She does that a lot. So really looking forward to it.
All right. So make sure you join us, investors.com/IABD Live. All right, everyone, have a great day. And the team will see you right back here tomorrow.